Even experienced CFOs can struggle to get the annual budget approved by the board. And if you're not yet a CFO, you may be intimidated about how to even approach this. So in this video, I'm going to show you the exact system that I use to get my budget not only approved by the board, but to get their full support. My name is David. I've been a CFO for 12 years, and I'm here to use my experience to help you to be a successful CFO. Now, is it just me, or do all CFOs love putting together the annual budget as much as I do? It's a challenge. How accurate can you get it? How can you outperform the budget every year? How can you make the process improved all the time? My aim is to inform the board as much as possible and to have them own the budget as much as I do. To start, you've got to understand the strategy behind this approach. When I first became a CFO, I inherited a very simple 12-month budget only. And the previous year, it had been rejected by the board multiple times. But it took several years of gradual improvements before I got it to the spot where it is now. Here are my 5 guiding principles to get the budget approved by the board. The first one is strategy. The budget is a strategic tool that's going to help drive the vision of the company. The second one is transparency. We're going to use an open process when building the budget, and we're going to provide high levels of details. The third is feedback. We're going to build multiple points along the way where they can make input, and we're going to make it an interactive process that's going to lead to them having their full buy-in to it. The fourth is a 365-day approach. Budgets are an endless cycle. We need to keep gathering information all year long. We're going to help that inform the following year's budget, and we're also going to use it to inform forecasts for the end of year position for this year. You may also want to start the budget process quite early to leave yourself plenty of time to get it done. And if you're an inexperienced CFO, this is one of the things that can catch you out. And there's nothing more that screams more than an inexperienced CFO than a late budget. The fifth is to build a solid budget tool. It needs to cater for changes to variables and assumptions that will flow through all the reports and across multi-years of your forecasts. So how can you apply these principles in practice? I refined my process over several years, and I got it down to 5 key phases that you can use with your board. As a reminder, if you're serious about becoming a CFO, check my website, CFO Hero Project, for how I can help you get ahead and fast track your process to become a CFO. So let's talk about the first phase in guiding the board. Now, this is the most important one. It's the budget parameters. This is where we're going to seek direct input from the board to assembling the key parameters that are going to make that budget a success. We want to give them a starting point by showing them last year's parameters and then the suggestions for this year. Don't give them a blank page. We want to give them a starting point, and they can debate whether they want to go higher or lower. My parameters, for example, have 12 key areas that will assess whether or not the business is successful that year or not. You may have more or less, which is fine. You want to tailor it to what makes sense for your business. The parameters can cover things like financial KPIs, staffing levels, sales targets, significant business initiatives, capital projects, and debt levels. You can also include any key assumptions as one of the parameters, and that might be specific to your business, and it could be, for example, interest rate levels. The parameters are just a 2-page document. You don't want to go into a massive amount of detail. It's about setting a level, and it may be, for example, setting a specific number, which is a minimum return rate, but it also may be setting a range. So it could be something like sales targets growing between a range of 8 to 12%, for example. Now, we have to get the board's buy-in to the parameters before moving on to the second phase. And that's going to be the budget sketch draft. Now, here it's going to be just a 1-year budget only. It's going to be the income statement, and we're only going to keep it at that level. It's a very rough starting budget, and it's something which you can do very quickly. And the aim is to identify if any major changes need to be made before putting a lot of effort and time into the full budget draft. Now, this phase won't include detailed input from department heads, for example, but it can include estimates of areas where you've got strategic initiatives, you've got material changes for expenditures that you know you have to build into next year. It could be things like insurance premium increases, cost increases for contracts that you've already signed. utility rate increases, new lease agreements that you've already signed, and it could be things for new service contracts that you're entering into. They're the sort of things that you've already got that information and you can build that into the draft budget straight away. And finally, add in any high-level income estimates, and you could bring in pricing strategy increases, current year forecasts and trends, so that you've got a starting overview for income levels. Now, the budget sketch draft, you may consider showing a version of that to the board. This is a bit subjective. It depends on whether or not you're going to have a difficult year where you want to have them see a lot of information early. But it's not actually necessary that this version is shown to the board. It's more important to see whether the budget sketch draft looks okay and allows you to move on to the stage 3, which is the draft budget. You've got 3 main components: the income statement, the balance sheet, and the statement of cash flows. We're going to prepare all 3 for the draft budget, and we're going to do it preferably over a 5-year period. That's what I use for my examples. If you can only do 3 because it's harder to predict things into the future for your business, that's okay as well, but you do want it to be a multi-year process. And the draft budget now is going to include things like significant capital investments, new debt arrangements, equity raising that you may have planned, and full cash flow forecasts that bring all of those in along with the actual income and expense levels for each year. And depending on how you're building your budget, you may at this stage now have gone out and got significant input from department heads in terms of them proposing what they want for their own internal budgets, and that can then be built into the overall organisation's budget. And this is when we want to seek final input from the board, because we are still very much open to feedback at this stage. We're looking for any suggestions or any other reprioritisation of bigger expenditures and projects. So we're going to move to stage 4, which is the final budget. We're going to take that feedback and revisions from the board's input, and we're going to build that final version. At this stage, we may also have more information that will help us tighten up some of our estimates and assumptions that we've already built in, so we can refine that further. Now's when we're going to build our final report pack, and my secret weapon here is a commentary paper. This is going to provide all the analysis and insights into the budget components. It's going to outline things like the assumptions that have been used throughout it. Otherwise, the first question the board always asks are, what assumptions did you make? What interest rate levels did you use? What projections on sales do you use? So you want to cover all of that in a paper which is structured, provides a lot of detail and a lot of transparency around all the things you've used to compile the budget. Other things you might consider making comments on are things around the staffing structures, staffing levels overall, interest rate assumptions, any other cost drivers, any other sales growth rates, things that are going to make significant input to changes in the budget and whether or not it's going to meet the parameters that we started back within the first phase. The next section I have discusses the budget risks. Another critical one, because the board otherwise are going to ask, have you considered this risk or that risk, and so on. You want to get ahead of that and put as much detail out there about all the things you've already considered when coming up with the various components. So my commentary paper is about 5 pages long. It's a very structured paper. It follows the sequence of the budget, but is also an easy read. And we really want to give them insight into how we've put it together, all the things we've considered, and also to give assurance that there's nothing missing. The final budget pack now can be assembled, and that's going to go to the board for sign-off and adoption. Once all that's done, we move on to the 5th phase, which is ongoing reporting. You want to do this at least quarterly, but my preference and how I do it is to do monthly reporting, and for most businesses, that's really where you should be aiming for. Regular reporting against the income statement is the most critical because that's going to answer the common question from the board: how are we doing so far? How are we doing this month? Any surprises? What should I know about? They're the sort of things you're going to get asked, so you want to try to get ahead of that with what information you put out in that regular reporting cycle. So at a basic level, The income statement will show the actual versus the budgeted figures, and we'll track that across the year. But I also highly recommend that you consider adding in a forecast column. So then you can start tracking where are we forecasting to be for the full year versus where we've budgeted against. That's what I do, and that adds a lot of value to the conversation at the board. Now you can consider having a variance analysis report, and for many people, unfortunately what you're going to end up doing is spending half of that report talking about here's the budget, here's the actual, and here's the timing differences of things that have sent it out. For me, that's a little bit of a waste of time. Your variance report might be 1 or 2 pages long. You don't want to spend that talking about timing differences. So I spend my time on the report talking about where the forecasted position is versus the budget. That is going to add more value to the board about giving them the insight of how the business is really tracking. What's going to be right for you though will depend on your board and what information they need to do their job. My tip though is to keep that sort of information fairly high level so that you don't start overwhelming with copious amounts of detail. But you provide information which is around the key drivers of the business. That's what they want to track. I also include with my reporting a 1-page document which is a financial dashboard, which is really just trying to capture all the critical KPIs of the business and how we're tracking forecast, budget, actual, and I do it for the last 3 years. And in some cases, I track some items against 3-year moving averages. And finally, I include a commentary and insights paper, another 1-page report only, and trying to capture some of the key things happening in the business that aren't necessarily just financial, but it can be things where just at a summary level, it's very helpful for the board to know about it. And the format and content of some of these reports, I'll show you in detail in another video. And if you use these 5 phases in putting together your budgets, you'll have a massively increased chance of getting the full support from your board with your budgets. Okay, so if you're a new or aspiring CFO, I've got more content designed for you based on the real life experiences as a CFO. Check this one out. You're not going to want to miss that one. Please consider subscribing, like this video, and I'll see you next time.